Good morning, everybody. Welcome to the Flow Show. Here we are, Tuesday, 26th November, and fun and games today as well. Mr. Trump getting up to mischief on the old socials, as I'm sure you've seen if you look at the Looney. Thank you very much, Derez. Yes, a good result for my football team yesterday. The world and his mate expected us to get a pasting up at Newcastle, and we ended up winning 2-0, which was a nice surprise. So, yes, I'm in a chipper mood this morning, mate. Morning, Kay. How you doing? Hopefully not short dollar CAD.
Good morning, Hammer. Yeah, I'm doing well, mate. Doing well. No, I'm not short dollar cat. I did get taken out of a small gold leftover, but I've re-entered already. We'll look at it a bit later. But yeah, fun and games, huh? The tariff man is back.
Yeah, definitely back, and nice one to wake up to this morning. And we'll go over those headlines, obviously, in a moment. Right, let's go then. Where should we go? Let's go to Japan for once to start off with. There was some PPI data out from those guys. The corporate services PPI numbers showing a nice healthy 2.9%, higher than 2.5 expected, which was looking like it was going to dip from 2.8, although that was a higher revision. So another price component going the right way. One that isn't going the right way, though, is this BOJ core measure dropping to 1.5%. Was expected to rise to 1.8%. So nothing's really moving on a straight line in terms of inflation over there. We saw the national CPI numbers a little bit wobbly, but the fact that most measures are holding above 2% for now, that's what one of the conditions for the BOJ to hike again is that they want inflation stably above 2%. So they're almost on track, or pretty much on track with that at the moment. We'll see whether that means they're going to hike again in December. Over at the BOE, we've had Dingra out this time, saying that recent CPI outturns show no asymmetry in inflation unwinding. The UK no longer looks like an outlier for inflation amongst advanced economies, which is a bit strange seeing how sticky our inflation was. It says there is a disinflationary risk in the UK, but the risks to the outlook are uncertain and difficult to gauge. It says policy is weighing on investment and living standards. Hence the reason why they want to get rates down, or she'd want to get rates down. Then she had a bit of a slag off of the ONS, saying the lack of reliable data is hindering monitoring. And she actually went into a bit more of a rant about the ONS and their lack of being able to get a reliable jobs report out. So that she comes from India, where they have over 1 billion people and they can manage to get labour market data out pretty quickly. And here in the UK, we can't. And to add to that, there's been a story out this morning that the ONS say it may take until 2027 before they can start producing reliable data. As a Brit, I'm absolutely embarrassed by that sort of comment. It really is a joke, but I shall bite my tongue for fear of going off into a rant about that. I missed a headline from Mr. Ishiba in Japan. He's calling on businesses to make big wage rises again next year, reported by the Nikkei. What do you make of that lot? I mean, that comment from Dingle on the jobs day, it is embarrassing, isn't it? You can't get a jobs report out for 4 years.
I think she's living in her own world. I think she's trapped herself into her own thoughts, and I'm not even sure we need to pay attention to what she's saying anymore, right? But it is an embarrassment, especially as well that famous comment that she made on tariffs and inflation. It's completely outrageous from a central banker. On the other hand, I start to think that if we go back to Japan, that the Bank of Japan may overlook that core CPI that they are watching usually, but keep their hopes alive on the higher wages, primarily to continue to hike. Because if it's purely down to inflation, the window is starting to close. But they can keep it, let's say, artificially open if the wages are higher. Now, it's going to be an interesting discussion coming come early, well, come Q1 really in Japan, because if inflation comes down, some of those companies may not be in such a hurry to produce another round of big wage hikes. So it's I think we're going into a very interesting kind of discussion there.
Yeah, I can agree with that.
And yeah, we really have to be a bit, and we will react to what they do, but they will have to be careful, because we've been saying that in Japan it's a case of using the window wisely. They have been extremely late to start using the window to hike rates. I just hope for them the window doesn't close as abruptly, and they find themselves trapped, especially that. There's $250 billion to fund as well. That might be an additional bit of pressure not to go too fast with hikes.
yeah, yeah, and that was part of the virtuous economic cycle that they wanted to get building over there. You obviously need an improved economy to be able to pay those wages. It's economics 101. So let's see if they can continue with that. Over at the ECB, ECB Centeno says he prefers bringing rates to 2% or thereabouts steadily, sees a neutral level of rates around 2%. We did have ECB's Lane out yesterday as well, talking about mainly the transition of monetary policy. He's been saying that it's been forceful and stronger than the historical pattern. Now, there were a few comments. He was talking about how the ECB stepped up or had to step up rate hikes from, the standard 25s to larger sizes. And he's sort of made the case that people have concluded from that he's as equally open to doing the same on rate cuts. So given that we're playing the 25-50 game for the ECB at the moment, as I say, some in the market taking that as a conclusion that he's got the door open for a bigger cut. We know others have been talking more dovishly, like Centeno. We also had Nagel speaking last week, saying that the discussion around the size of cuts will be dependent on their next forecasts, which come in December. So there's a few members now. It was sort of one, it's now sort of 2/3, who are not advocating for a larger cut, but are more open to a larger cut. And this is something the market is going to pick up on when playing this 25-50 game. Now, Nagel was out again yesterday saying rates are still restrictive at the moment and the ECB mustn't cut rates too quickly. So he was more back to his hawkish self, but he has given a glimpse of maybe what his thoughts are underneath the surface. ECB's McLuth is another one. He said rates are on a downward trajectory, and then he said he's open-minded on the slope of the downward path, which again can be insinuated that he's open to maybe a bigger cut. De Guindos was out as well, saying we will have new projections in December, but developments point to growth remaining fragile. So a bit of a can kick, and we're going to get a lot of that. Everyone's going to be waiting for these December forecasts like they're the Holy Bible. Wren said salary and service inflation remain persistent, and they maintain the risk of inflation moderating more slowly than expected. The Eurozone economy will grow slowly and recover gradually. What are you making of this ECB lot? I wouldn't call it a shift, Kay, but it seems like that the crack of the door is just opening a bit more than it has been.
Yeah. It's this is going to be the tough call. I know they are not going to do anything in between a quarter or a half, but it may be the ideal meeting to do one. Yeah, they're really on the page of cutting, but it's still a very hard call, yeah, between 25 and 50. Lagarde, I think, on her side and that is a bit of a surprise to me because I thought that once she would get the opportunity, that she would go all dovish, but she surprisingly hasn't taken too much of a side on the 25 or the 50 calls, because she's probably going to be the decider here in because the rest are a bit open. Of course, you got Panetta and Centennial and a couple of others. They would happily cut 50, but I still think the Germans may need a 50 because of the state of their economy. French as well. But I'm still not convinced that they will go 50 this time. And the main reason for it, I would say, is that they may want to wait until Trump is really in the seat to decide on that 50 BPs. Because if you do 50 BPs now, um, they can still cut off obviously another 50 whenever they want, but it makes perhaps the discussion even more difficult in the next meetings. So I'd say I'm 60-40 still for them keeping it to a 25 this month.
Yeah, and I think I'm thereabouts. You
Mm.
can make a case both ways. Obviously,
Oh
the
yeah.
data is one case to go bigger, and like you say, waiting for Trump is another case.
Mm.
The third case is that they are expecting inflation to pick up into the end of the year, which it
Mm.
has started doing. Maybe there's a bit of caution about whether or about how high that inflation may go. If they go at 50, they risk making the problem worse by bringing in a bit more
Yeah.
inflation. So it's there's you can make cases either way.
Mm.
I think for now a 25, but I'm happy to change that feeling depending on what the data shows us between now and the December meeting. So
Yeah.
I'm certainly not going to paint myself into a corner.
No, I don't think so. But and I think the market is exactly where we are, Ryan. Anywhere in between the 25 and the 50. And the inflation may be just the excuse to be able to wait. So it's on what, Friday, right? That we get it this week.
Yeah, yeah,
Oh, but we do get the Germans on Thursday. Um, So yeah, I think it could be the perfect excuse to do the 50, and then they don't have to use the Trump argument to wait to do the 50 later on. So it could be a perfect excuse in the making there, providing that they are right, that inflation is a bit sticky into the year end.
yeah, very much. Right, let's go over to the old Yankee Doodles. Feds Goolsbee says he's cautioning against focusing on inflation in any one month. So he's pretty much brooming the recent inflation data. Fed's Cash and Carry said that he's still considering a 25 pip cut in December. That says it's a reasonable debate for them to have. Now, over the last couple of weeks, I've been highlighting various job cut headlines and whatnot. Well, we've got another one. Tyson Krupp Steel is looking to cut 11,000 jobs between now and 2030. So it's spread out a bit, but it's still another round of job cuts coming. So let's talk about Mr. Trump. He started off, there was a story out saying he's preparing his wide-ranging energy plan to boost gas exports and oil drilling, the old drill, baby, coming out there. We knew that was something he was looking at. But then he decided to hit the old social media, and it's important to note that he dropped this first on Truth Social, on his Truth Social platform, before it then got picked up everywhere else. He's talking about slapping China with an additional 10% tariff, and then slapping Mexico and Canada with 25% tariffs on all products coming into the US. Now, it's important to know the background for his reasoning. His reasoning isn't per se to do with trade. It's for China, it's to do with illegal imports of drugs, particularly fentanyl, which is a big issue in the US. For Mexico and Canada, it's the issue of immigration that's bringing drugs and crime through to the US. So that's his reasons for these tariffs. These tariffs are not per se part of the trade deal tariffs and stuff that he's going to be looking at. That was when he was threatening to slap 100, 200% tariffs on Mexican produced cars coming into the US. Okay, so this is a different thing altogether. It's just a precursor or an appetizer, whatever you want to call it, for those. Now, obviously, the important factor is that he's gone active on the social media again, meaning that we get moves like we've seen in dollar CAD, like that. Okay, so this is the next 4 years, folks. Volatility, some of it good, some of it bad. You can't take your eyes off the social media channels right now. Now, China's already responded to that by saying that they do have controls over their drug exports and that sort of thing. They brushed it off. Canada PM Trudeau said that Canada places the highest priority on border security and the integrity of the shared border of the US. And I think he had a call with Trump as well. So this is a first shot across the bows. It's something that Mexico and Canada can react to pretty quickly, should they wish, if they want to avoid an early fight with Trump. But as I say, this is not wholly part of the trade stuff that's going to be coming. What do we do from here? Well, I think just looking at dollar CAD as one example, and dollar MEX is obviously in a similar boat. I think we need to maybe see what the US do with this before we decide which way this one's going, whether it's going much higher or coming back down again. Personally, I would favour a fade. I'm not going to chase it down here though, and I want to see what happens with the US. And this is obviously brought to light that there is a risk that he can drop truth bombs whenever he likes, and the market can move whichever way it goes. So we have to be careful. But as I said, this is an example of what we're potentially going to be getting for the next 4 years. So be ready for it. What do you make of it, Kay? Is this something we need to fade, or do we need to be a bit more careful?
In the long run, careful. In the short run, we may be looking to fade something, but now to choose in between the three, I'd rather fade the Canada than the mix or the Chinese yuan, because I think if it's a psychological game now, right? Or not even a game. It's a psychological war. But I think the Canadian side may solve itself perhaps a bit easier or cool down a bit easier than the others. He's very adamant to stop the Mexican side, because the Mexican side is not only immigration, it's also Chinese products coming into the States via Mexico. The nearshoring, friendshoring, that the Biden administration accentuated, is also something that he will want to counter. So I'm reluctant to counter trade the Mexican side of it. But the Canadian side, perhaps, that is something different. Now, it's all part and parcel of his approach to politics and to trade. So it may just be the start off, use immigration, use the fentanyl big problems that there are, for sure, to start slapping tariffs on, then see how it goes, and if they haven't learned their lesson, start more. But I think the bigger his approach is not only going to be this one. This is just a start of putting in place his or actually threatening to put in place, because he's still not in the seat. But so you could see a bit of a counter trading for it, especially if into year end there is some dollars to do or so. But yeah, I think I'd rather, if I counter trade anything, it's rather going to be the Canada than stuff like the Mexican peso or the Chinese yuan.
Yeah, yeah, I can agree with that. Mike says on the old Zoom chat here, the 20% tariffs are coming. It's the minimum he promised. I'm still in the mindset, and it's actually funny watching everyone else bricking themselves about these tariffs. Be it in the UK, there was a piece out that apparently some UK ministers are planning retaliatory tariffs against Harley Davidson and Jack Daniels and stuff like that. Everyone outside of America is running around with their pants on fire over this, and he must be loving it, because this is what's going to bring them to the table. You know, he's got the upper hand already before he's even made a call to talk about this tariff stuff. So, as much as he's going to threaten, and we should take him at his words, because, you know, if he's going to threaten 25% tariffs and China, Mexico, Canada don't do anything about immigration, by the time he sits down, then they will go on. Absolutely. But this will drive people to the table. So I still don't think the worst cases that we're hearing about, 100%, 200% on cars, etc., is a definite, and it's going to happen. What it's going to happen is it's going to drive people to the table, renegotiate deals, and come to some agreements. That's the case I'm in at the moment. So let everyone else run around with their hair on fire, but be prepared that things will calm down and deals will get done when he does take the hot seat. Ray says, will this tariff not going to be deflation in the US? Yeah, it can be. I'm not overly keen on everyone jumping on the tariffs are inflationary. You know, you can look at various other examples, and I've made examples, you know, myself. When you withdraw a cheap product because of tariffs, then you have to pay the price that's already there. So if China's selling something into America for $5 and local producers can only sell for $7, everyone's going to buy the China one for $5. But if you put tariffs on that make the Chinese goods $10, well, everyone's going to go and pay the $7. That's not inflationary, because that $7 price level didn't change. Okay, so it's never as clear as, oh, tariffs equal inflation. But if that's what the market wants to go with, who am I to argue? I'll just trade the moves and trade the extremes and do whatever's necessary. But it's never as straightforward as what you read in the papers, shall we say. Right, let's finish off the headlines. There was, and we saw a bit of a risk rally on the back of this yesterday, which was a senior US official saying that the US believes Israel and Hezbollah ceasefire deal has been reached. But then the US State Department came out later on saying it doesn't believe it has an agreement yet on Lebanon. The US believes gaps have been narrowed significantly, but there are still steps that need to be taken. So that's one of the reasons why we saw gold crap out yesterday. Was on the back of those risk headlines. Again, it just gives you a little idea of how much of the gold trade is based on these geopolitical events. Kay, what's going on with gold then? It's, as I say, it's given an indication of what happens when you pull out some of the risk stuff, but it's not really going to change anything in the longer term picture for the moment, is it?
I don't think so. And well, just because of prices, I've let the rest of mine go in the money, but then I bought it back this morning because just because of the fact that, well, two reasons basically. I'm still of the opinion that the dollar may weaken a little bit into year end, but that's a different thing, I think. But in the present, well, a bit contrary to the example that you gave just a few minutes ago, I do think that tariffs are going to be inflationary for most part of it. and also as Israel just commented, giving themselves all the freedom to react to any so-called firecracker that one of the Hezbollah people would set on fire, and retaliate again. I think it's only a temporary setback. That's what I'm thinking right now on gold. But I will again repeat what I've been saying. We need to be on our toes because it just moves fast. It's a fast mover. If you look at it in percentage wise, we have done 4%. Again, we corrected 5-6%, then we moved up 4-5%. Now we're moving down 4%. Just be prepared for those kind of moves, because I think those kind of moves will continue. And but yeah, in time, I think over time, I still have not changed my view. And again, we were talking about levels. And you can see $100 down in gold. It's a lot. It is really a lot. But then if you look at it from the whole affair started somewhere in 2021, 2022, we still have gone from 1800 up to 2700, and we are in the 26s. We are not trading down at 2300, 2400, which could be a risk if everything thaws. But yeah, I'm not changing my global view yet on gold, but we need to be careful with the price action.
Yeah, very much so. Just going back to the inflation thing, Galaxy on the chat says companies are doing preemptive price hikes. Yes, there is a lot of that. He says Walmart is stating 25 to 50% of prices will be higher. I get that, but it's twofold. Okay, you've also got countries like China, who we're probably going to see their trade numbers improving, because they will be banging out exports as fast as they can before any potential tariffs come on. So people will be stocking up at the cheaper price before they have to pay higher prices. And you're also talking about retailers. Okay, if they put prices up, but there is no inflationary impact on their bottom line, on their input costs, what are they going to do? They're going to say, oh, here you go, we're going to give you some money back, or are they just going to bank the extra margin that they've made? Yes, it will create inflation, but that's more taking the piss inflation out of consumers rather than actual inflation and putting prices up in line with their input costs, so to speak. I'm not saying there's not going to be an inflation. I'm not saying it can't cause inflation. I'm just saying I don't think it's going to be as bad as what everyone's making it out to be at the outset. Remember, people like to get very extreme on all these sorts of things and scream about it being the worst case scenarios and whatnot. So it's going to be a mess. Let's just agree that's what's going to happen. It's going to be a mess one way or another, and we'll trade through whatever it tells us and whatever it does, and we'll take it from there. And obviously, the Fed will have to do the same if they see higher inflation. It'll be interesting to see how they react. Do they just see it as a short-term shock, or do they actually have to raise rates to counter it? That will be what we have to trade over the months ahead going into next year. Right, that's it on the headline front. That's been a long one this morning. You got anything else for us, Kay?
No. We've covered it all.
Good. Broad sweep with that one. All right, so where are we? So I've got gold up there, so I'll leave that one alone for now. Well, that's my clearer chart. I've got my messy chart, my intraday chart, which has, tons of levels all over it, as you well know, and I've got my cleaner. Oh, that's all gone wonky. I've got my cleaner charts to look at. So let's go on to a bit of a wide one just quickly. Oh, what's going on? It's all broken. So we've got this 2600 level. We've been down it before. We've tried holding below it. We've been down to this 2530s area, which was a solid bounce. So I think one thing we have to look at is that we are not looking like we're going back to these highs just yet. Okay, but while we stay above this level, it still keeps those highs and the trend in play. If we start breaking through 25.30s, that's a different kettle of fish altogether. And then 24.15s is part of the bigger trend going back to October. So as we were saying, a bit of sideways action going on this one. Now, one thing that was I found interesting last night with the Trump stuff, even though it was directed at, CAD and the MEX and whatnot, was the price moves that we saw in other pairs as well. Aussie dollar got a knock on the head. Kiwi got a knock on the head. And I think that was perhaps a bit of fear. Like I've been saying, everyone's getting a bit scared about this. A bit of fear that who's next? Who's going to be next for a truth bomb to drop from Mr. Trump? Now, the key move in this one was that we tapped below that 64.40 area where we had a pretty solid bounce last week or so. That is quite a long-term level as well. I don't know if I can show it. Oh, there we go. So it is quite a long-term level. Goes back a couple of years, goes back a bit further as well. We did crack the egg, but we came back above it pretty quickly. So that will probably solidify if we get another test down there. But as you can see, we're not looking awfully hot at the moment, particularly this one. And as I say, Kiwi dollar looking similar. We've had a break also down, but it hasn't stayed down for long. Another break under this 58.40 level, and we're back above, but it's not looking overly hot. I was actually speaking to Michael Brown on the trade-off about this one. If we get a close below this 58.40 and a daily open below it, then I think that's a signal for trying the short side and seeing if we get a bit further downside. That will indicate maybe a potentially decent break of that level. Maybe we're going to be heading down towards these sort of lows around here. But yeah, this is another fairly big level. It's a bit like the 105 in euro dollar. And I'll go to that quickly before I bang it over to Mr. K. This one is very indecisive what it wants to do. It was looking nice technically yesterday. 105 hold, 104.50 hold, 105 hold, a break up. Then we held the top of the zone at 30, almost to the pip. Back down below 105, blah, blah, blah. We did get a break below this 104.50 area. So that might be washing out a little bit. All this is telling me is that we really don't know what we want to do just now. We keep finding buyers, though. I will say that. We keep bouncing, more times than perhaps we're, making new lows, but we're not cracking through this zone yet. So this 105, 105.30 area is really a bit of a pivot point. You've got to take your cues if we're breaking above and holding above it. If we're not, it keeps all this downtrend in play. It keeps the bigger downtrend in play from the 112s. It's all small stuff at the moment, small level stuff. There's no breaking of this trend until we're probably back up above 107, something like that. So it's all little steps at the moment. And it doesn't know what it wants to do. So I can't rule out that we might head back down to the 104 figure, maybe even towards those lows again. Might be Trump driven, might be data driven. Who knows what it might be. Even if we get above 105.30, we're probably going to run into a bit of trouble at 106. So we need to take out all these little steps before you can even think about a bit of a turnaround. It also is not really showing any strong signs of forming a decent bottom. So as I say, that still keeps the downside well in play. Mr. K, I'm going to bang it over to you, mate.
Yep, cheers, mate.
There you go.
So straight away, let's first take Ali's question or Ali's comment about the Swissy. I've cleaned it up a little bit. So there's a few lines that went that are gone. I could set it back on here for as an example. As you can see here, I think it's 88.20 rather, and an 88 the figure. That's where I think that it should hold right now. The dollar Swiss. I don't really. Yeah, we can argue that there's a few levels here as well around 88 and a half, but will they really be traded? I am not. I'm not convinced. That's where we are right now. I'd feel more. More confident is even a big word because I really don't know what I want to do with the Swissy right now. Um, but we can see from the Euro Swiss that saw a few jumps there that most of those moves are relatively spiky moves, and then we tend to come back here. Um, no, I really I don't plan to do anything at least here, but 88 figure 20 is going to be a bit of a zone there, Ali. And then on the top side again, because this has been really a traffic level around 89 the figure, and then of course the prior top 89 and a half, 89.60. But right here I'm not really feeling too tempted on what to do. I just want to go back quickly on the euro dollar, just putting up the chart just because what we see here, and I'm going to go on a shorter one, and don't worry about any lines whatsoever, but look at what's been going on since the start of the week. We come in 8, 9 o'clock in the morning in Europe, and the Europe's being bought. We come in this morning 8, 9 o'clock in Europe, and the euro starts to be bought. We are in month end territory in things euro dollar, perhaps other European currency, like for instance the sterling is a little bit bid as well in the mornings. So that's what I always say. Trade with the clock at hand when you trade in the last week of the month. And this week is potentially going to be really messy because we have Thanksgiving. So people were maybe tempted to front run all their interests. I think especially tomorrow may be a very tricky one because we are going to potentially see some US corporate interest, or even this afternoon, but that's going to be in the mix with what the models are telling us, which are rather the other side. So be prepared to have a bit of a messy price action in a lot of things, but especially in the euro dollar, I would say as well. All right. So just as an example, on more, I mean, if I look at the levels, to me, I know we have like slightly different levels at times, but to me, and it's nice that it's a red line. To me, my red line for the euro dollar is still 106 figure 10. For as long as we are below, I don't see too much of a reason to go for a more medium-term trade unless you are confident in catching knives. But I do think that the blip higher that we see in euro dollar now is more to do with month end than really a lower dollar, for instance. Okay, so that's what I think about the euro right now. Dollar yen. Pretty simple. I think again here 153.40.60. That's where that's the first level that everybody is looking at, obviously, and rightfully so. Stretch it to 153.70. We are trading right on it, but we are on the zone here, and then the bigger one. Point of no return may be a big call, but again, 152. If it goes below there, I think the market is likely going to try and push for it to go lower. Can it happen? Yes, especially into year end, maybe if we look at dollars or so, and especially if the Bank of Japan would do another rate hike later in December. But it is very possible. We are rejecting those higher levels, but then again, I just want to repeat, look at it in a more longer term. We are still quite high, and yeah, people are looking for reversals for it to trend lower again. I still want to see it happen before making decisions. So far, every move that we saw, and you can see it on the shorter term, every move that we saw to come back in this zone lately met with some demand. So yeah, those are the two levels that I'll be watching here. If we start to get back above that 155, 80, 90, you can find it here as well. I think then the door is probably open for a return to 157. But yeah, as I said yesterday as well, I think it's going to be a bit volatile too. What else? Well, yeah, usually as usual, looking at gold, we are below this zone 35.45. Once we've broken below, we have attempted to rebound, but we are running our head into that little bit of a ceiling right now. So this really needs to break again to the top side to start going. I think we are more in a rangy path right now. It held the 61.8 of the move higher, so that's an interesting one here, around low 26s. But I do think that this level here, 25.90, 25.80, yeah, 25.90, call it, that's going to be relatively important, not only for pure price action, but it's also, I think, going to be a bit psychological. If you start to get below 25.90, people say like, all right, we are leaving another big figure. We need to be a bit careful here, and then we could actually go all the way back down to low 25s. Why not, you know? Silver, very hesitant. Not getting involved right here and now. Tariffs has a bit of the effect of tariffs may be not obvious for stuff like this, because you could say like, okay, it's going to make prices a bit more expensive for local American producers, but on the other hand, is it not going to hamper exports in other countries, which usually would be a big user of silver? And I'm thinking about EVs and stuff like that. So it is a very unclear picture. You want to trade it on the back of price action and levels. Yep, of course. But I think on the fundamental side, it's a very unclear picture right now for me. And that sums it up for me right now, Ryan. I'm not really looking at too much else, you know. I'm really following the fashion, what's happening from 1 hour into the other. And as I said, I'm keeping an eye on the clock. Could be a very messy month end. We are going to have more social media comments, I trust, from his royal orangeness. And then for the rest, yeah, keep it safe, and I give it back to you, Ryan.
Thank you very much, mate. Good stuff as always. There's not a lot out this afternoon. We've got a bit of house price data, Philly Fed, non-manufacturing, new home sales. We do have the Conference Board consumer confidence data. So we'll keep an eye on that one for a latest look at the consumer. But apart from that, we'll call it a day for today. Thank you very much for coming and watching us here at the Flow Show. Have a great day's trading, and we'll catch you all same time tomorrow. Have a good one.